So my next guest says that the U.S. economy provides right now, the way it's set up, the perfect setup for the stock market. I want to bring in Main Street Research Chief Investment Officer James Merton. James, so you're saying, okay, sort of Goldilocks in a way, right? Not too fast to ignite inflation, not too slow to risk recession. A nice little glide path there.
Yeah, it is a perfect setup, Charles. Great to see you again. Investors, this is like a wish list situation. I think the Fed was sort of giving us a sense of that last week. They really don't want to do anything. The economy sort of growing just right. Inflation numbers have been a little weaker than expected. Perfect environment for equities. You know,
it's interesting. I mean, I think the Fed should cut, not for the stock market, though. I love it when the stock market can go up without accommodation. That's to your point, that's the perfect scenario. You don't need any outside cash. It's the system exactly working the way it was designed to work.
That's right. And we've gone through a lot of uncertainty. But as we go into the back half of this year, I think what we're going to have is more certainty, but also we're going to have some big tailwinds. One is productivity growth from AI. We're already seeing it in companies.
I'm going to show you. I'm going to let you finish your thought, but let's just show your audience, because this is part of your target. You've got one of the highest targets now. I think there's a few folks at 7,000, so you may have to go sharpen the pencil. But you already talk about this, right? AI-led productivity gains. They're coming no matter what.
Yeah, they're already embedded in a lot of companies, seeing the economy. But then you get those animal spirits. We saw a little of them in the first quarter. They kind of went running away. But those animal spirits of tax cuts, dereg, going to be really important in that second half. And I think you're going to get more certainty around tariffs.
You have Fed policy as on the list too. Does that mean they start to either cut or telegraph they're going to cut?
We think they will. You know, there's headwinds with tariffs. There's headwinds with scaling back fiscal stimulus, and we think they're going to have to come, and that's going to be that extra oomph the market's going to need towards that 6,800 number that we're looking at.
One of the stocks that you like and that you've been in is Hood, right? Here's the most amazing thing. So less than a year ago, this stock was trading less than $20 a share. Here we are at almost $84 a share, and this is not about hype, right? You know, I've been talking about this on the show now since that Circle IPO. There's been an epiphany. I still think 95% of the folks on the street are missing out what's happening. This is a real fintech revolution. Oh,
it sure is. And, it's way past the era of a few years ago when it was just a meme stock, a theme. In our view, this is a company that's just starting to mature and blossom. They've got a bunch of different initiatives to get investors to bring more money, like the bank and Robinhood strategies. They're seeing assets come in significant ways. They remind me of an early days Charles Schwab.
Yeah, and it's the maturation of Robinhood and some of these other names. NVIDIA is an intriguing name because finally, it broke out, right? It's breaking out, and now I'm hearing that, hey, you've got to look at, Jensen Huang is you talking about someone who's really brilliant. He's got to go in the Hall of Fame, right? So at one point it was a crypto play. At one point it was a gaming play. Of course, now, it's a play on AI, but they're doing more things, right? They keep evolving.
Oh, boy, they do. The new chip, the Blackwell, this whole product cycle they have is exciting. Orders exceed sales. The stock, this is really important for investors. The stock's the same price it was 6 months ago, but the earnings have gone up a lot. So the PE's contracted. Great bargain.
Let's talk about some other stocks, because these are, it's good to get away from the usual suspects, right? Because we talk about NVIDIA almost every day, which it deserves. But you like T-Mobile here.
We do. I think investors do want to get away from the Mag 7 entirely. T-Mobile, largest wireless provider in the world. They bought Sprint years ago. AI's come into our handheld devices. T-Mobile, excellent way to play it at 25 times earnings.
Duke Energy, this is, again, a sort of de facto AI play, right? The data centers?
We need more energy, Charles, and it's got to come from nuclear. That's really where they focus.
What about, though, Tran, though? What's up with this one?
Train keeps us cool. You got AI, crypto, just lighting up servers, all that significant energy and heat. Train makes HVAC equipment to cool stuff down, to save energy. It's what the world needs.
It's that when you look at a name like this versus all the others, there feels like a little bit of a risk-reward safety, a safety component to this, because they do have a core business that in of itself has been, historically attractive.
Yeah, consistent business for a long time, but now accelerated by the AI, crypto, EV market. You know what I love about it? It's not well known.
Right.
At Main Street, we try to look for names that just aren't the commonplace.
It's great to get positioned there, and like a couple of years from now, let Wall Street discover it.
You got it.
See you later. Good stuff. All right, James.